Tesla enthusiast Ron Barron predicted that the price of Tesla shares would continue to rise over the next 10 years in April. The Tesla investor had already earned $6 billion from his initial investment at the time. According to him, Tesla investors will soon see returns of up to 5 times their original investment. He estimated that Tesla would be worth trillions of dollars by 2020 and $1 trillion business by 2030. He added that Tesla is only just getting started and that its stock made up approximately 12.8% of his holdings. Tesla is viewed by Cathie Wood as a very profitable investment option. The stock expert has already revealed why she believes that this endeavor will grow from less than 10% of the stock market to more than 60% by 2030. She is rather interested in disruptive innovation, shares of such businesses to be extremely valuable, and that the majority of investors will be passing up incredible chances. It's possible that Tesla's heavy investment in disruptive innovation is one of the reasons Wood is so positive about the business. A bullish call on Tesla was made in 2018 by a stock investor who set a price objective well in advance of analysis. With the highest price target from analysts sitting at 500 and shares of the electric car firm struggling to attain 346, the Wood's call on Tesla's stock appeared to be very excessive at the time. Cathie Wood also predicted a bear market and a share price of $4,000 for Tesla. Goal of 600 analysis of ARK Investments in a March article. Tasha Keeney also mentioned that ARK is increasing its forecast of Tesla's share price from $1,400 per share in 2024 to a new aim of $3,000 per share by 2025. The general public believes that the transition from internal combustion engines to electric automobiles is significant. The stock expert had previously mentioned the declining demand for gasoline, noting that it is an example of true demand destruction that could not have occurred without electric vehicles, since multiple other analyses have also noted the decline in demand for gasoline. According to a recent assessment by Worm Capital researcher Cameron Tierney and partner Eric Markowitz, there is now a disruption in the ICE vehicle sector, with some claiming that by 2030, all new mass-market cars would be electric. By 2030, Tesla is probably going to rule the S&P 500. He claimed in the paper that Tesla's competitive advantage, derived from developments in artificial intelligence, made it a significant player in the sector. The report, which is based on a multi-year analysis of Tesla's numerous business segments, all of which had expanded as a result of the rapidly growing automaker, demonstrates Tesla's intention to manage and reinvent its own factories and components to meet its own demands. He added that the automaker is far ahead of both traditional and smaller EV manufacturers. The experts predict that Tesla's expansion will assist it in achieving a 50% compound annual growth rate by 2030. In fact, they anticipate an expansion of the margin profile in addition to an acceleration of net income and free cash flow in the upcoming years. Revenue increase, as those are signs that Musk may acquire the social media site. Musk's Twitter transaction may ultimately prove beneficial for Tesla. Along with Tesla, SpaceX, and Twitter, Musk will now lead 2 significant businesses. Musk bought 9.2% of the social media firm in April, and while some are worried about how well he will fill these positions, others think it's not completely out of the question that he will succeed. Ron Barron claimed that having a lawsuit on Twitter's board of directors was not much of a problem, considering the size of the stake in relation to Musk's wealth. Musk's automotive businesses are already worth $1 trillion, and they will likely reach $3 or $4 trillion in the future. Companies like Rivian, Lucid, and NIO will need years of persistent effort to match Tesla's benefits. High revenue levels to rejoice in the fact that the automaker has the infrastructure required to thrive in the EV sector. It has the largest global supercharging network, which puts it ahead of many other EV companies. Tesla operates in China. Every long-term investor wants to create a significant profit from their investments over an extended period of time in order to have adequate money for their future demands. One thing is almost certain. Tesla may someday surpass market leaders like Apple and Amazon as the biggest corporation on the planet. Let's say Tesla finally reaches the size it will have in the future. Imagine how much money investors will be able to make from its shares in the EV company and how much its stock will be worth. Hey guys, glad to see you back. Tesla shares at the time of this video. Tesla stock was trading for less than $250, which is probably not the normal share price to support a secure retirement. Tesla, however, has the potential to increase in value significantly in the future. Recent months have seen a number of stories about Tesla, particularly given the company's declining stock price. Even though I think Tesla stock is overpriced, There are compelling reasons to think it is a wise investment that will generate significant returns for the retirement fund. Let's say you decide to buy Tesla right away. How many shares will you need to own by 2030 in order to comfortably retire? What will this video show? To stay up to date on all of our upcoming videos and everything Tesla related, please press the like button, subscribe, and enable notifications if you enjoy this kind of content. In the quickly expanding EV market, Tesla has a respectable market share. Contrary to some other EV companies that find it difficult to retain their profitability, the vehicle company has maintained its market share over the years, despite the entry of more businesses into the sector. It can therefore be predicted that as the industry grows, it will continue to dominate even more market share. Tesla has established itself as a very successful company, making its shares a wise long-term investment. Tesla is a top-rated automaker in addition to being a leader in solar energy and battery supercharging. Although a big portion of Tesla's revenue comes from its cars, the car company is technology-driven and has one of the most developed software industries globally. From these other businesses, the vehicle manufacturer also makes a lot of money. Tesla's net income in 2021 was $5.51 billion, a 665% increase over its net income of $721 million in 2020. The same year, Tesla made around $1.46 billion in revenue from its Powerwalls and regulatory emissions credits. Tesla's financial records show that Megapacks and solar roofs generated $2.78 billion in income. In addition to the company's current businesses, Tesla is already pursuing additional growth opportunities. These include the Tesla Bot Cybertruck, FSD, and a prospective robo-taxi service, all of which are anticipated to increase the company's earnings and growth margins. How many Tesla shares will you need to own by 2030 then? Watch to find out more. In North America, a person's average monthly expense is close to $3,000. We may round that up to around $5,000 per month, or about $60,000 per year, by adding the cost of other incidentals like travel and healthcare. You'll need to have around $2 million saved up in the bank if you want to default and live comfortably for the following 33 years. This implies that your overall holdings in Tesla should be worth this much by 2030. You would want 130 shares in a large scenario where Tesla is worth $15,000 to retire with $200,000 in cash. 200 shares are required in the base case at $10,000 per share, and 500 shares at $4,000 per share are required in the better case for a less volatile investment income. Source: you might put money into the S&P 500, which offers a more secure yearly return of 8 to 10%. It is crucial to understand that the required share value may change depending on a person's lifestyle or living expenses. According to several analysts, Tesla stock will increase dramatically from its current level by 2030. Especially given that the globe is undergoing huge transitions, EVS billionaire investor